This show is sponsored by Sevi, answering all your commercial real estate needs. Sevi is the first commercial real estate company committed to the 4 C's: commercial real estate, community, content, and culture. Go visit Sevi at Sevi, Sevi properties.com. Again, seviproperties.com. Hello, everyone. Welcome to the DMV Business Show. I'm your host, Otto Sevilla, and today I have a very special guest for you. We have Josh Goulding. Josh is a CFA, Certified Financial Analyst, and CFP, Certified Financial Planner, and he's also the co-founder and partner of 4J Wealth Management. Welcome to the show, Josh.
Thank you so much, Otto. Happy to be here.
Pleasure's all mine. Thank you. So before we go into your personal and business journey, in case the audience has heard, they're like, what is 4J? Obviously, wealth management's in their name. What do the folks do there, please?
Yeah, it's a great question. So the reason we named the firm 4J Wealth Management is the four founders' names happen to all start with J. So Josh, Jamie, Jennifer, and Jeff. And our clients referred to us as the 4Js before we actually started the firm. And so it was just a natural, if our clients are referring to us this way, it just kind of was a natural segue.
Oh, that's great. I didn't know that was the story behind it.
Yeah, so so there's a lot of meaning to me. And the clients still, they joke around when we do hire someone else. There's like, well, does their name start with a J? And obviously, well, that's it's the founders of the 4Js, but we can't limit our all of our future employees to start with the name J.
Sure, sure. So obviously you manage assets, wealth, right? So what do you do there exactly?
Yeah, so we are a wealth management firm. I would say we are very heavy in comprehensive financial planning. So when we work with a client, they're not just saying, oh, here's this account, manage it and try to make as much money as possible. We're looking comprehensively, holistically at their cash flow, their net worth, their tax situation, estate planning, insurances, and building out a roadmap for them based on what are their goals, right? Do they want to retire in 10 years? Do they want to make sure they leave a legacy? Do they want to buy a second home? What are their plans for their kids in college? So we kind of build this roadmap, and then the relationship kind of develops, and that plan gets updated, that roadmap gets updated based on what's happening in their life and how it evolves.
So everyone's plan, every individual is different then, right?
Exactly. Everyone is definitely unique. The money management piece is, I like to say, a component of a comprehensive financial plan. It should not be looked at as kind of a standalone service. I know there are many who offer it that way. I just don't think it's nearly as impactful, rather as opposed to when you factor it into kind of their overall plan and goals.
Okay. And I know the wealth management industry has gone through a transformation the last few decades. So, I mean, I even remember at one point, I think I had an internship in college with back when Smith Barney Citigroup
Yeah,
was still in
yeah.
existence, and just cold calling. And I was with working with two brokers, and we would just be calling everywhere. Which I'm sure now it's very few do that, if any, right?
Yes, I think that's few and far between now. Luckily, the industry has evolved, but I think that's exactly right. And when I started in the business back in '07, it was very much, hey, here's a phone book, here's kind of a general market. Good luck to you. And it's very, very difficult to make it. I believe Merrill or someone put out a study, or often would say, out of 100 junior brokers that start, only 10 kind of survive. And that's not a very good model, right? To put people through that type of pain and suffering with that degree of failure. So I'm sure the failure rate is still high, but it's gotten much better. It's gotten
Sure.
better.
That's great. Are you originally from this area, Josh?
Yeah, I am. I actually grew up in Bethesda, Maryland, went to Walt Whitman High School, and ultimately went to Georgetown University. So yeah, I'm a local. Grew up in Maryland. Went to school in DC, then lived in DC, and then now I'm in Northern Virginia, and our office is in Northern Virginia.
That's great. I love that you're local. So growing up in
Yeah.
the DMV area, if I can just take you back to childhood for a moment, what were you into? Would you like? And
Yeah.
extracurricular activities outside of school?
Yeah, absolutely. So, I love sports as a kid. Elementary school was a very active, maybe hyperactive child, and I played all different sorts of sports. Was from a very kind of tight-knit family. My mom stayed at home with us. She was previously an accountant, and my dad, from as since I was born, I guess he went to work there. Yeah, in '78. So after I was born, he had worked at Sally Mae his entire career, so he was always in business. He ultimately became a pretty successful businessman. And I still remember a story from I was probably 12 or 13. I remember sitting in his car, we're driving through downtown Bethesda, and I said, Dad, why don't you buy Microsoft stock? Bill Gates is the wealthiest person in the world. And I remember looking at me and said, he encouraged me and said, I'll call my broker. So whether he did or not, I'm not sure what happened, but it was the first time kind of the dots connected between curiosity and actual financial action. And I was always curious about money, how it worked, the markets. We were very comfortable, fortunately, but in Bethesda, there's a lot of very, very wealthy families. And so you'd see these families have certain things and be able to do certain things. And I was always just fascinated by how they had these businesses and what did these businesses do. So it was just kind of an innate curiosity from a young age.
The interest in when you mentioned that comment as far as Microsoft, did you
Yeah.
see anything prior to that, Josh, or did you read
It was an
something or TV or?
No, it's a really good question. I don't remember previously, but it was almost just this, and this is not at all how to pick individual stocks. I was 12 or 13 years old, but it was like an intuition. It was like I remember it being like an intuition, like, wait a minute, this person has created something that has allowed him to be the wealthiest person in the world. And this, of course, was the mid to late 90s, so we were still in kind of that tech boom. Like,
Hmm.
why would you not want to own a share of something where this person has created? Now, Microsoft had a period from 2000 to 2012 where it went nowhere, and of course, now if you were able to hold it, it's been one of the best holdings you could have possibly had over that time frame. But yeah, I wouldn't say it was more just the spark of my curiosity and that story that has stuck with me my whole career.
So you were, it sounds like you were always interested, whether the financial markets, business, how things work, the economy and all, right?
Yeah, absolutely. Very, very just I think that's a big reason I've been successful. Like you said, I'm a CFP and I also have my chartered financial analyst designation. I'm an insatiably curious person, and I'm always trying to get to the truth, right? Like what really is driving, what's really driving the reason why something happened, right? So from a stock perspective, right, a stock's going up, but why is it going up? What's going on under the hood of the business, the fundamentals that's driving that wealth creation?
So at a high school, did you knew right away you wanted to go into somehow something related to business?
Honestly, no, I didn't. I went to Georgetown. You know, I kind of started off with a very athletic path, and then my athleticism kind of tailed off in the middle school time frame. And I became extremely focused on my academics. Like I was very driven. I wasn't necessarily the smartest kid in the room, but I knew that if I put in the extra work, I could do well. And I would say 90% of the reason I was able to get into a school like Georgetown was just putting in the extra hours. When I got to Georgetown, I actually thought I was going to do pre-med, and I did the pre-med prerequisites, believe it or not. My dad did as well, also in the business. My brother did pre-med and also in the business. So we all kind of started off on this failed doctor path. But went in as a chemistry major, switched to pre-med, and then became a psychology major. And psychology, believe it or not, has a huge, huge role, as you probably know, in financial decision making, in markets. I mean, Buffett's written about it, Munger's written about it. I'll talk a lot more about that. But I was at a holiday dinner. I remember kind of senior year of college, and my uncle, very, very successful businessman, he retired at 47, basically said to me, we're sitting around talking. He goes, "So you're going to go into sales, right?" I said, "I'm not sure. Why?" He goes, "Well, you're a really affable person, and I think you would do great you would be a great salesperson in business. And so that kind of started the journey.
Hmm.
But when I started interviewing different companies, obviously there were a number of financial services companies that had come to Georgetown, and I really liked the people aspect of it. And I think of myself as a people person. I really care about people. I want to know their story. So personal financial services was kind of a natural fit. And it was a little bit at the time, I would say, kind of an outlier move because most of my friends, and all my friends, were going the investment banking route, right? They were all getting, interviewed with Goldman and all these places. And the idea of working, 12, 15-hour days in front of a spreadsheet, I would rather do anything else than that. But then there was this other path, right, where you could work with people, you could, be in business for yourself, but not by yourself because you were part of a company. That really did appeal to me. And even early on, Otto, I knew, okay, when you're young, and again, this is kind of just was intuition on my part, but I knew I could afford to take a lot of risks being young because I had a long time horizon.
Hmm.
And going into this business, I knew it was higher risk, right? There, all the stats going in. A lot of people don't make it, but I was willing to take that chance. Now, those first few years, I don't think I realized how difficult it might be, but ultimately, I was able to make it through. But it was very, very difficult at times.
How was those first two? Who'd you join in the end as far as the beginning?
Yeah, so I ultimately joined AXA Equitable, was my
Okay.
first job out, which is one of the largest insurance companies. It's owned by a French company. And that was honestly a great place to start. I learned the insurance part of the business. I learned the basics of financial planning, a lot about retirement planning, how 403(b)s worked, 401(k)s worked, and how to build a book of business. And I would say one of the most important things I was told by my first mentor, who I was shadowing kind of initially at that company, was, and this jive with kind of how I was raised and how I thought about the business, is always put the relationship first. Even if it means the person doesn't buy something from you, then you put the relationship first. And I think in business, so many people make the mistake of focusing on the short term, the transaction, and losing sight of the long term. And by taking the long term approach, you're focused on the relationship, right? They go hand in hand. So I would say that was one of the most important things I learned at that company. And your eyes open. You see people who had the CFP designation, who were doing, more comprehensive planning, who had carved out niches with dentists. And I loved how you could be really creative in the business. And even though we might all have a title of financial advisor, you can be doing very, very different things. And like no day was the same.
Was Axe local?
Yeah, so AXA did have an office in Falls Church.
Okay.
So, they're all over the country, but they had an office in Falls Church, and that's the one that I worked out of.
Okay, that's good because I know you mentioned earlier some of your buddies went to Goldman and investment banking, and for
Yeah,
that, that's I'm sure Wall Street, right?
you got it. You're
So
going
the
to New
good thing is that
York.
you were able to stay local here with the financial services route.
Yeah, all DMV my whole life, Otto. So,
Josh, so in,
yes,
in in the beginning, here you are, this young, probably in your early 20s, I'm assuming,
yep.
right? And you're like, here, please trust me with your assets, with all your wealth. I'm sure that's not an easy sell, right?
No, no, it wasn't. And I think what AXA did a good job of is pairing you with more senior, you know, advisors where you could bring in, right, somebody who was more senior, more seasoned to kind of work with the client together. But there
Hmm.
were times where I was on my own. And yeah, I mean, it's a very strange thing to know, hey, I'm 22, 23 years old. I've gotten my designation or I've gotten my licenses. I'm getting my designations. You don't have that confidence yet. And for me, I quickly realized I was 2009. So in the business of '07, early '09, I said I have to get my CFP because I knew the CFP provided a comprehensive you had to have a comprehensive understanding of all aspects of personal finance, estate planning, retirement planning, investments, cash flow. And as I was going through that course, my confidence started growing dramatically, right? You had very seasoned, I went through the Dalton education program through Georgetown University, and the professors there had so much experience and were so knowledgeable that as I started to kind of learn and then see apply, oh, this applies to this situation, this can apply to this situation, it mapped very well business experience.
You mentioned earlier how in the beginning it was very tough. It just
Yeah.
reminds me, as I mentioned, when I had that internship in college,
Yeah.
and we were basically a room of, gosh, I don't know, 8 to 12 guys, all in different colleges. Some went to GW, AU, University of Maryland, whatever, all local boys from the area. And we were just pounding the phone. And I saw a few there were a couple of years ahead of me graduate. And they're like, hey, let's go into the business. And the two brokers, financial advisors I was working with, sort of helped guide them. But I saw them struggling the first 12, 24 months. Eventually, I don't think both of them stayed. I think one became an
Yeah.
analyst at a government contractor. Someone I think moved up back to Boston, where they were originally from. And one of the brokers that we were working with pulled me aside. He was like, "Look, this is a tough business." He's like, "Most of my wealth, even though I am pitching stocks and bonds and all this,
Yeah.
most of my wealth is in commercial real estate." So then he showed me his commercial real estate
Oh,
portfolio,
interesting.
and then he's like, I have a good buddy that's in my country club who I play tennis with, who owns his own firm in McLean. And then he connected me to him, and then I went to an internship there, and then that's what brought me into the commercial real estate world, which I've been with most of my career. Um,
Wow.
but as you mentioned, it's tough, and I saw those two kids that were ahead of me try it, eventually didn't make it, and you mentioned it was tough for you too. So how was those first couple of years for you?
I think in 2009, I remember I made like $23,000. So if that kind of tells you all you need to know. But here's what I'll say. And I also remember this conversation with my uncle because I was t telling him. So I moved from AXA to a DBA, at the time, who was a part of Guardian. So it was also insurance, but they did fee, they charged a fee to do comprehensive planning. That was the start of the relationship. And I knew early on that that was very, very important. That if you went in just trying to pitch a stock or a mutual fund, that was a transaction. In my their comprehensive picture. While that was the most difficult year, well, that was the most difficult year for sure that I had. It was definitely the most valuable because it was so, so challenging, right? And I remember my uncle saying to me, early on, the harder the better. And that sounds, but I think I learned more. I still look back and think that year and a half at IBC was my most valuable year because I really learned in the trenches how to do comprehensive planning. And I had a mentor there, Jay Weiland, who did old school financial planning that you just don't see. He typed out recommendations, and we still do that at 4J to this day. So I think early on when you're starting out, it was so hard. Um, but looking back, I'm so grateful that I had that opportunity because it taught me one, to persist, but two, that you have to figure out. For me, it was if I'm sitting on the other side, what is the service that I would want to buy? And from who would I want to buy it? And everything I've done since I started in this business has been around that central theme. If I'm sitting on the other side, do I want this service? Would I buy this service? And that's how I've always worked. It's a simple thing, but it's very powerful.
In 2009, when you made that 20 something thousand dollars, you
Yeah.
were how long in the business? Already three, four
So it's
years,
three years.
3 years.
Well, October of '07, so October of '08. It was in my second, third year.
Okay. When did you notice, Josh, that you sort of hit that stride? There was a pivotal change in your business where, like, okay,
Yeah.
the money's coming. I'm seeing something. Like you mentioned earlier, some people decided to focus on niching down and maybe holding sessions and webinars or events for
Yeah.
dentists, right? I don't know. Or
Exactly.
So did you notice a change in your business where you decided to do something differently?
Yeah, so I moved from there, from that firm to another boutique wealth management firm, and that's where I actually met my other three partners. So we were all working at that firm, and one of the things I noticed in the business, and there's great things about all these companies, right? So I'm not saying anything negative, but there's what's best for the client and what the client needs, and then there's kind of the corporate incentives that every company has. And I think I realized early on that while companies may have great products, there is inherent conflicts when you're affiliated with a big company or work for a big brokerage firm. And I knew you wanted to be more and more independent. And so at that wealth management firm, that was the most independent I had seen. But then even there, they have a choice of whether they want to do this product or that product, or there's perks if somebody, if they sell this product, there's certain perks that they get, and there were still conflicts. And I just kept saying to myself, if my parents are sitting on the other side of this table, I would feel icky, right? Knowing that those things were in the background, and acting like you're doing what's best for the client. And so the other three J's felt similarly to me. And so we broke off. Okay. We broke off and went to another firm. There's a lot of steps here. Went to another firm, but that firm, we were kind of our own group. So we
Okay.
were the own four J's, and clients knew us. And I would say that is where, even then it was tough, but I was starting to make enough to survive, but that's where we hit our stride. And where we hit our stride there was we had this client base, but what we did was everything we did was as a team. So it wasn't, these are, like, how it is. These are Otto's clients, these are this broker's clients. Everyone has their own silo.
Mm-hmm.
And we just said, wait a minute, like, we don't need to operate that way. We can operate as a team and service clients as a team and actually do a lot more for the client, and also make the business, right, stronger because it's not tied to one individual. And what we started doing was doing mailers to thousands of people, offering a 6-hour retirement class, 3 hours Tuesday, 3 hours Thursday, and they paid $49.
Oh,
You
wow.
believe it? And you send it out enough, and that is literally Otto, where we went from here to, like, really started. You said, where do we really gain
Yeah,
traction?
yeah,
That was
yeah.
it. And Jamie and the other partner, would do the classes. I was principally the presenter, but he was always there. He was older than me, more knowledgeable still at the time. And we grew our practice through those classes. We did 6 to 8 of those a year. 6 to 9 or 6:30 to 9:30 at night. We would host it at a local library or college, Nova, Springfield Medical Campus, and people would come, and I would just teach. My dad told me early on, I think it was great advice, always soft sell. Always be a soft sell. Everyone hates the feeling of being sold hard, right?
Yeah,
So
yeah.
all I did was teach, and there would be a moment in every class, an hour in, hour and a half in, where someone would ask a question. And once that question was asked, it was like all the other questions came pouring out. And that's where you get to demonstrate your knowledge base, your value, and that you care and that you can relate to them. And at the end of that class, we would have a sheet, and they would check off the stuff they're interested in. At the end, I would say, we offer a follow-up meeting, no charge, for anyone who wants to delve more into their personal financial circumstances and questions that they have. And, a lot of people said, no, thanks. We never called them. But enough people said yes, they would come in, and then we would answer their questions and say, look, the next step is to go through a comprehensive plan. We charge for that plan, believe it or not. I know I'm rambling here, but it's really important, because that process results in, one, you get people who are very serious and don't just want a transaction-based relationship. And two, you tend to get the right clients, right? If you're doing these mailers or things like that, where it's like, come to this fancy dinner, and you don't pay anything, I mean, I know there's people who built their businesses that way and it works, but it didn't really work for me and it didn't work for us. But this did more of that education advisory role, being a teacher. And it just, we got great clients. Almost all those clients who went to those classes 10, 15 years ago are still with us today. And I would say that's one of the most important things that I learned once kind of we started hitting our traction was take on the right clients. Don't take on any client, right? And again, that's that long-term thinking.
Hmm. I love how you explained the process. It's great. So you said you started with
Yeah.
1,000 households, right? When you sent these mailers?
10,000.
Oh, 10,000. Okay.
10,000 and maybe 10 to 20 would come. That's the hit, would come to the class.
Wow. Okay. Okay.
So those mailers would cost us, $10,000,
Sure.
$6 to $10,000. I forget exactly. It was a while ago.
Hmm.
And you get 15 people, you get 2 or 3 clients. It might not even be a positive ROI in the first year, but if you get one recurring client at $5,000 a year in a comprehensive relationship, right?
Hmm.
Then you get referrals from them. The ROI is very, very good.
When selecting these 10,000, I'm
Yeah.
going a little bit deeper now. So is
Okay.
it a certain zip code? You're looking for value of home? Be like, hey, we're going to mail, right? Bethesda,
Exactly.
McLean, Tyson's. Um,
Exactly.
okay.
That's precisely it. I mean, you can't narrow it down, but it's like I think you could do it in certain, age, home value, zip code, and it's just a numbers game. And that's true. It always has been a numbers game, this business, and I think it always will be a numbers game. And it's timing. We send these, and the other thing is, it is kind of like a built-in marketing because many people said, "Oh, I got that mailer for the last 2 years, and I just kept throwing out." But now I'm really thinking about retirement. So when I got it, the timing was right, and I wanted to do the class at that time.
How often were you mailing them out? Was it once a quarter or more
It was
frequently
about
than that?
six times a year.
Okay. Okay. Same household, or would you change it up sometimes?
I mean, we would change up the zips a little bit, but it was generally kind of
Yeah.
the
So they can
same.
continue to see you all the time. Like, oh, this is Josh again, or the four
Exactly.
J's. Okay.
Exactly.
Okay.
Exactly.
Are you still doing that now or no?
No, we stopped. COVID kind of changed it all. We did it like an online webinar version and COVID. It was not
Same.
effective,
It was
right? This is not
different.
the same as when you're in person. And then now we're not really paying for that stuff as much. We don't need to. We're doing a lot of our business is referral based, but we've got like organically gotten invited to like speak at community centers and things like that. So maybe at some point we'll start that up again, but we've gotten to a point where we really don't need to be doing that, right now.
And were they always two sessions? I know you said you
Yeah.
have two options, so each session were different topics you would cover?
Correct. Well, it was one kind of class, but it was broken into 2 3 hour sessions, which sounds crazy. I mean, it's so much. Like looking back, like, that's so much time for people to invest. But yeah, it was. I mean, you came to both sessions, right? One, it was kind of the first half of the class, and then the second half. So it was broken into like life planning and retirement, um, you know, cash flow and net worth. Um, and then the second half was like investments, estate planning, insurance, right? So you kind of had two pieces, but it all was one class.
What I know you said you transitioned jobs from different firms. When
Yeah,
eventually did you decide like, okay, hey, let's
yeah,
go off on our own and just form,
exactly.
let's make it official, the four J's.
You got it. So from 2012 to 2018, we were at that firm doing these classes, right? And then in 2018, we got to a point, and we talked as a team, and I said, look, we always knew that eventually it was very important to have our own firm to really build this thing from the ground up to be as conflict free as possible to offer the best fiduciary type of advice. And we were at a point from a revenue standpoint that it made also financial sense. And so in September of 2018 or August of 2018, that was kind of our D day.
Wow, so that was
And
7 years ago. Okay.
yeah, so 7 years ago. And it's important in our business. It's a relationship business. So many of these clients we had been working with. I mean, Jamie had been working with many of these clients since 2004, 2005. I've been working with many of them since 2009, 2010. Um, so we were their people, right? They didn't affiliate their business with the firm we're at. It was really us.
Hmm.
So when we did this, you don't know. You feel like you're walking off a ledge, right? You start your RIA, you take out office space. You create a website. There's so much stuff you have to do. I would say, Otto, within 2 weeks, we knew everyone was coming with us. It was that quick, and of course a huge relief. But good step when you step out, you just feel like you're like floating on air because everyone's still at the old firm. Then you send out that notification, and then it's like, wait, what's happening? Where did you go? Why did you do this? But it's been a huge best decision we've made.
That's great. I'm happy to hear that 100% went, with you. I'm sure your former firm, your previous firm, actually probably gave it to some other financial advisors, like, "Hey, Josh, the 4Js are leaving. You can contact them." So I'm sure they heard from your previous firm, right?
I would imagine they did, yes.
What would you say, Josh, was the toughest part, basically going off on your own these last 7 years
Like at the beginning or just in general over the 7 years?
in general?
In
And it might have been in the
general?
beginning. I don't know, but yeah, just
Yeah. Well, at the beginning, there's so many pieces, right? You got to get you have to get an attorney to help, draft the operating agreement. You have to get office space. You have to furnish it. You have to have IT providers, vendors. You have to have all your own, everything is on your shoulders. That was very intense. I'm very happy we went through it, but it was very challenging. Once we started the business, I would say the hardest, most challenging part for me, or the part that keeps me up at night, is just the compliance piece. Because, right, when you're at a big firm, there's a lot of oversight, there's a lot of compliance people watching everything. But when you're on your own, you need to be doing that for yourself. We're financial advisors. We're not experts in regulatory matters. So you can outsource some of it, but ultimately the SEC's position, my understanding of the SEC's position is there's a chief compliance officer at this point is me, and the liability ultimately lies with that individual. So that's a pretty big weight that's always on your shoulder of, you know, it's not just it's more than doing the right thing. It's also having the right practices and procedures that are defensible.
yeah. What would you say drives and motivates you?
Um, what drives and motivates me? So I kind of said before, I'm a very, curious person, and I have a deep desire to kind of get to the truth, which is why I did the CFP, why I did the CFA, why I wanted to start 4J Wealth Management. But what really drives me, what really fulfills me is a client saying a couple of things. One is that because of the work we've done with them, they have peace of mind. Okay, that's kind of a true north, right? If the client has peace of mind, or if a client says, "We trust you explicitly," that's about as big a compliment as I can get, or as we can get. And then kind of the bigger piece that kind of inspires me now is building a firm that outlasts me. And when our clients' children and grandchildren finally are looking at their parents' estate, they can say, "Wow, mom and dad really cared. Mom and dad really made good decisions. And I can't believe that we're in the position that we're in because of those decisions that were made." Like, to me, it's someone who's never met us, looks at their parent situation and says, I can't believe that I'm going to be inheriting this, or that mom and dad laid this out so clearly for me. That moves me.
Um, and speaking on that last part, it just made me think about you mentioned children and the next generation. And the majority of your current client, would you say 50s, 60s, 70s,
Yeah.
80s?
Yeah, it's a great question. I would say definitely kind of retirees are the majority.
Okay.
60 to kind of 75 is I would say kind of the biggest. But yes, there are some. We have a client who's 96, or excuse me, think she's 97 or 98 now. I mean,
Yeah. Wow.
incredible. But our fastest growing part of our practice is young professionals. People, right, dual income families who have young kids, they're going through career transitions, a lot of needs, very busy, can be quite high earning. They have a lot of planning needs, a lot of investment management needs. So that's a growing part, but yes, still the bulk of that kind of retiree section.
So speaking of that, I think I forgot where I read it, probably Wall Street Journal, some other publication, is the biggest transfer of wealth. I don't know how many trillions of dollars, right? From baby
Yeah.
boomers to millennials, like you mentioned. Um, how are you maneuvering that? Or are you doing something differently or?
Well, I think it depends on each client's particular situation, but you're right. Like most people that we work with, from the good decisions they've made, and then I think us being good stewards and providing good advice, it's highly likely that they are going to pass away and there's going to be substantial assets that are left behind. And so one of the things that we focus on is on every agenda, we're looking at estate planning, right? So we're focused on, do you have the right beneficiaries listed? Hey, I have kids and grandkids, but I want to make sure this stays with my kids and grandkids, but they're married now. Do they need a trust? Does the trust say the right thing? Is it updated? So coordinating with their estate attorneys or referring them to estate attorneys and making sure those documents are up to date and say what the client wants. I think it's a really important part of a job of what a wealth manager does, because that's ultimately transfer of wealth is the estate documents and your beneficiary designations. That's what's going to happen to that money when you're no longer here.
You mentioned in the beginning, it was always the four J's. Does your
Yeah.
team look similar now, today, 7 years in it, or has it changed?
So I'm really happy you asked that. And this goes back kind of to your other question of what's one of the most challenging things that happened. So Jamie Hamilton was one of the J's in 2022. I noticed that he wasn't acting like himself. And it ultimately went to the doctor and he had a brain tumor. And it was a very aggressive brain tumor. And he ultimately passed 2 years later.
Oh,
And
God.
it was incredibly, incredibly hard, right? Because we were friends, we were business partners. He's a part of the fabric of our company and clients, right? Clients worked with all of us, but they worked with him and they trusted him. And I think it's a testament to the team approach that we didn't lose a single client as a result of that happening. And we were able to put in place a buyout agreement, right? Kind of pretty quickly, where he said, I really want to spend these last whatever years I have left, focus on my family, going to my kids' sporting events and being there for them. And we agreed on a buyout agreement, and it's a 10-year buyout, and his, spouse family is going to get that payout for the next 10 years. I would say that was a pivotal point in our firm, and just kind of really just solidifying who we are. And he will always be a part of us and part of our story. But it was incredibly stressful because he was the CCO. I quickly became the CCO. You have to have the money to do the buyout. And then you have, clients, it's their life savings. All of a sudden somebody's sick that they trust. And because of the way we work with as a team, clients didn't miss a beat. They said, Jamie trusts you guys. We've worked with you for enough now. Like, nobody even talked about leaving. I thought that was probably my other than just being terribly sad about what happened to him and his family. My concern was, what if 20-25% of our clients just leave because they don't feel safe? So it's changed. So now there's the three J's, and we have hired two young advisors, really client service associates, who
Hmm.
have been a fantastic addition to the team. And they've been with us for almost a year now.
Speaking of the topic of the team, have you noticed, when the financial service sector, more people wanting to come in or less demand throughout time?
You mean for to
Cor-
Forge Wealth?
Yeah.
Oh,
Well,
I would.
just overall, a lot of people saying, "Hey, I raising their, I want to be a financial advisor today in 2025,"
Yeah.
right? And
Oh, you're talking about people coming into the business.
correct, yeah, and therefore, obviously, it trickles down as far as everyone else in the business, right? As far
Yeah.
as the talent pool available.
I would say increase. Now, part of maybe I'm seeing the visibility of that is as a business owner, you get more inquiries that come in.
Okay.
But yeah, without even one of our hires, like he reached out to me. I mean, a lot of these kids graduating from schools, they're very ambitious and I mean, he spent time on our site. He watched our webinars. He looked at my history. He said we were both psychology majors. Like he had done his homework and it impressed me, right? And he sent this
Hmm.
email. I'm like, okay, I get a lot of cold emails on this stuff, but this one stood out. And so we had a Zoom and then kind of it went from there. So I would say, um, yes, but we have a problem in the industry too, because we have a big gap where you have a lot of still advisors who are 60, 65 years old. And then you have this gap, and then you have kind of the next generation who's 45 and under. So I think there's a huge opportunity. And one of the big things that's changed, Otto, from the days of, cold calling, like you and I had to do, is like what I'm trying to create for them, what we're trying to create for them is a path where they can learn the business, meet with clients, shadow us, have a salary where they're comfortable, but then kind of give them stepping stones so that they can grow into kind of a partner over time. And that was never offered to me. There was nothing really like that. And I think that's another way in terms of what inspires me. It's like creating that next generation and giving people a path where they don't have to go through what you and I went through, which is just like this constant fear of failing and not making enough to meet your bills month to month.
That's amazing. So these new people coming in, are they, do they share some of the book of business? How does it work?
So initially, they're paid a salary,
Hmm.
and what we've done is you said, look, get your 65, which allows you to give advice, but beyond that, immediately they went into the CFP program, and we paid for half of it.
Hmm.
They paid for the other half because I think it's really important. I've learned to have skin in the game. Um, and we have them sitting in on review meetings. We have them helping build plans, write recommendations. And every week we do an investment committee meeting. And what we've done kind of as time has gone on is we'll just off the cuff be like, okay, Otto, the Fed came out and said this. Why are we still holding these bonds? Like just asking them kind of challenging questions so they have to think on their feet because ultimately when you're across from a client, right, the client can ask you anything. It's their money. And if you're not able to think on your feet and give an articulate answer and have a reason, you're not always going to be right, but you have to be thoughtful and give a good reason. And so that's kind of part of their training. So we're just immersing them in the 4J experience. And, eventually they're going to be more responsible for business development, but we always want to keep it kind of as part of a team versus these, silos where everyone has their own clients.
Okay, that's great. So it's not that, okay, you have certain goals as far as AUM to bring in or number of clients, nothing like that then.
So not yet.
Okay.
But what we're going to have is kind of after the first year, I've built out kind of a 3 to 5 year plan and not like some of the wirehouses where I think what they're expecting is ridiculous. But they'll always have a salary. There'll be a bonus, which is based on kind of how the firm does as a whole, as well as them meeting their objectives. And then kind of that third piece, which is their own incentive to bring in the business. And then they get a piece of that business and they will continue to get a piece of that business ongoing. I'm not a believer. I hated when firms would say to me, you'll get a bonus the first year, but then it will go away after 2 or 3 years. And firms do that. But it's like, for me, it's like, well, you want this person to have a relationship with that client. You need to pay them as long as that client stays with the firm. And that's my philosophy on that.
What advice would you give to someone who wants to get into the business, actually, Josh? Since we're talking about this topic, any pointers as far as what they should think of or look out for?
Yeah, great question. I would say definitely joining a wealth management firm who's a registered investment advisor, because then you're kind of going the route of as little conflicts as possible, in my opinion. And then making sure there's a cultural fit and that they have a program or a vested interest in mentoring you and seeing you, right, a path to partnership, right, that exists there and that they're serious about it. And that you have access to, like, it's not just, oh, this person hires you and then you go off and you work for somebody else. Like if you're starting this business, you want to be working with the key members of the team who are actually working with the clients who are making the decisions. So, that's not for some people want a big corporate feel, but obviously I was drawn to more the entrepreneurial small boutique route. So that's the advice that I would give for people. Find them, you want to find someone who your values align, there's a cultural fit with the firm and what you want to do.
How about for a client perspective, as far as them selecting the right wealth manager to
Yeah.
oversee the wealth?
Great question. I would say one is if an advisor comes in and says, we're going to do this plan for free and kind of is salesy, I would just say be cautious, right? Because this is a long-term relationship. This is a relationship based on trust. This is your life savings. I think it's very important that they understand if they're going to be working with you, they understand the whole picture, right? It's kind of like what you're doing here. Like, tell me about your background. Tell me about your family. Where did you work? What are your goals? What are your hopes? What are your dreams? What are your fears?
Mm-hmm.
And then building out a plan so they can say, okay, I understand your tax situation. I understand when you're need income from these accounts. I understand how much you're going to need. I also may say, right, that person may say, look, based on where you are, you want to retire here, we may need to push this back a year. Like, if they're giving you that type of advice and not pushing you, I think that's a very good sign that they're vested in, a long-term relationship. And then going through that plan, and then, they're going to put together a proposal, I would assume, on, how they would work with you, what the fee's going to be, what the portfolio would look like. And you just have to be comfortable with it, right? Do you trust them? Are you comfortable with them? Those are the key things. Ideally, it's someone who's referred you to that person. That isn't always the case, but that helps a lot because at least then it's not totally cold.
So if someone immediately starts pitching you a product, big red flag.
I think absolutely. And the thing is, sometimes those products like sound great. I don't really want to go into any specifics, but like
Mm-hmm.
it's like, oh, you can't go down, and you're gonna go up. It'll be capped at it.
Yeah.
It's just, it's not, there's no free lunch, right? There's no free lunch. And if someone's, and the other thing is, how is that person how are you getting paid? Well, I'm not, you don't even pay me. I get paid by this company when you buy the product. Well, that tells you a lot. What does that
Mm-hmm.
tell you? Are they working for you or are they working for the company? Or the
Very
product they're
true.
pitching, right? Because if they're getting paid by the mutual fund or the insurance product, that then really, right, they're not acting as a fiduciary. So you actually want a situation where they say, well, you pay me directly. In this relationship, you would pay me directly. Here's how I charge a fee. Um, that's I would say that's a critical thing to know and understand.
And typically, the way 4J wealth management works is there's a fee for the overall assets under management. Is that how it is?
Correct. So it's only assets that we're managing, but we're charging a fee. And as part of that fee, we are doing the asset management, but then we're also dealing with everything else that touches their life outside their portfolio, right? And that's a big part of that's the planning. But it's, hey, I'm thinking of changing jobs. I want to talk about how much do I need to make? What are the benefits? My stock is vesting at my company. What do I need to do? What should I choose in terms of the stock option how I can elect, how I can take this option. Um, I mean, my parent died. I got divorced. I mean, I've seen it all. Spouse passes away. What do I do? Right? We are there. We are the personal CFO. Our team is the personal CFO for that family. Whatever financial need comes up, that we want them to call us. And if we can't solve the issue, if it's a very tax specific issue or a state issue, we have a network that we can tap into to get them the answer.
Are the majority of your clients here local in the DMV area?
They all started, well, not all, but almost all started in the
Majority.
local DMV area. But a lot of people, as you know, like they retire and then they move to the Carolinas or to Florida or for, down to Charlottesville area, Virginia. But I'd still say, 40%, 50% or no, more than that, I should say 65% are in the DMV area. But all of them basically were in the DMV area and then have subsequently moved in
Any
retirement.
specific industry or niche? Because it just brings me back, some
I
financial
know
advisors, focus on
it's
dentists or attorneys or,
100%. No, everyone always says you need a niche, you need a niche. It's gotta have a niche. I mean, I would say that if you look at our book of business, probably 40% because of DMV are retired senior military and government workers.
okay.
And right, they have their pension system, which is unique, their TSP, which is unique, their benefits are unique. And I just think that's also kind of there's their own culture of people who work at the government. Um, but we haven't, retirees as a niche, but it's not like we're like, oh, this is, we only work with athletes or we only work with dentists. It just, maybe it was, we didn't have the fortune of stumbling into that niche and really just only having it. We were a little bit broader.
What would you say is your biggest challenge with your role today at 4J Wealth Management?
It's a great question. I would say my biggest challenge is going from being a financial advisor to clients to being a manager of advisors who are coming up and want to eventually be, you know,
Hmm.
true financial advisors. That's right. Because from a time standpoint, it's intensive. And then just it's a different skill set, right?
Yeah.
Managing people is totally different than, providing advice to a client. It's just totally different. So that's the current challenge. But I love it. It's a great challenge because again, I just think back to myself when I was 22 starting out. If I had had someone who would do what I'm trying to do, it would have made all the difference in the world.
So how is your typical day? Is it split? Let's say you'd like to focus during certain blocks for, client facing activities or then management or
Yeah, exactly. So I would say it kind of all feels like it gets blended together, but
Mhm.
generally several client reviews a day, usually two client reviews a day. Our client reviews are not like 15-minute calls. These are 1 to 2 plus hour meetings with agendas and reviewing the plan, like very in depth. And generally, what I try to do is pull in one of the junior advisors so that they can sit there, they can take notes, they put notes in the system afterwards, so that we have clear documentation of everything that was talked about, follow up. Um, so I would say kind of the day is split between kind of two review meetings and then there might be some event that we're speaking at, community service event, a client event. Um, as you know, like emails come in, you got to handle the emails. And then
Sure.
just throughout the day, I think they have, people have questions, they want to talk about something, they want to review something they're working on. And so I try to make myself available. Probably could be more organized in that realm, Otto, in terms of how the day is structured, but it's just the type of business where it's very fluid, right? You get a call in that the client's passed away or something's happened, you kind of have to drop everything and attend to it.
Of course. Every day is different then. Yeah.
Every day, and I love that. I love how creative you can be, right? Like we do webinars. We're doing more videos, YouTube short videos on different financial topics. So we're trying to be more creative with content to get out like what 4J is about. And I think what you're doing is kind of the same, and it's awesome.
That's great. Thank you. What
Yeah.
do you know now, Josh, that you wish you would have known at the start of your career?
What do I know now that I wish I knew at the start of my career? That it would all work out. Um,
Yeah, I mean, it is a marathon. It's not a sprint for sure.
it is. I think I wish I would have known that when I was going through kind of some of those tough time periods, that rather than kind of resisting that and being afraid of some of those moments, to kind of embrace some of those challenges a little bit more because those are the challenges like that I think have helped to create what I am today and what the business is today.
Was there ever throughout our career, we all have setbacks, failures, however you want to call it. Was there
Yeah.
ever an instant that you can think of right now that's like, this is a huge setback, and how'd you move forward from that? What'd you learn from that? I don't know, maybe it was COVID to some people. Some of them was a
Yeah.
great financial crisis, right? I'm not sure. Or maybe something else
That's
personally.
a, that's a really, um, really good question. I mean, for the big one would be kind of Jamie passing was a massive setback, right? Emotionally,
Hmm.
mentally, huge realignment of the business. Um, from a pure financial standpoint, I would say 2022. Everyone talks about COVID, but 2022, and you're in real estate, when interest rates went from zero, and they were zero basically my whole career, because from the GFC, great financial crisis, all the way through COVID, there were no interest rates like 0%. Then also we had, 7, 9% inflation. Interest rates went up. Tech stocks, which, had just trounced everything, went down. Netflix, I think, was down 70%. Meta was down 70%. Microsoft was down 40%, all in 2022. It was 9 months of just a really, really tough bear market. I mean, COVID was tough in different ways, but we were down for like 3 weeks, 3.5 weeks, and then it just shot up. 2022 was just really eye-opening to me, uh, in terms of just, even more so, just really, really knowing under the hood what's going on, and how when a regime change happens, that you can't just, you don't want to be reactive, but you also can't just always sit back and be like, okay, well, whatever's happening is happening, right? You have to, and so that was a very painful time. And in 2022 was the time Jamie got sick, and it was the time. So it was this confluence of events of, inflation hitting 8%, interest rates skyrocketing, stocks going down. I mean, people don't realize this, but in 2022, a balanced portfolio, a 60/40 portfolio,
Hmm.
went down, but it was like the worst performance of a balanced portfolio, I think, since 2008. And then before that, for a long, long time, because bonds were down 13% in 2022 and stocks were down 19%. So that you didn't have any safety. So just kind of all those things stacked on top of each other. It was very hard, and then getting through it was really about, um, taking time each day to pause, sit back, and kind of almost reflect, right? Almost like a meditation, because it's when you're in those situations where stress is so high and everything is coming at you and clients are upset, you can go into this mode of just everything becomes reactive. And I think that's a very dangerous place to be, because that's when really bad decisions can get made. And so stepping back, taking moments to just, go for a walk, meditate, exercise, like realize that this, even though this is very painful, this is not going to last forever. That's what helped me get through that time.
Did you? I'm
And
sure
and
you.
and having an amazing spouse too,
Of
frankly.
course. I'm sure you received a lot of calls from clients, right? Was it a lot of the conversation just telling people, let's not jump off the cliff, let's be patient, or how was that?
Yeah, I mean, there was a lot of really, really tough. I mean, clients were really freaked out, and a lot of it was providing perspective and then bringing them back to the plan. Say, okay, we've actually, have factored this scenario in to
Hmm.
your plan, and if we look at your plan, you have, Otto, 7 years worth of your expenses that are not in stocks, right? They're not in things that have gone down with these monumental amounts. And by the way, if we look over longer time periods, stocks can have these rough periods, but historically, right, it's come back. These are quality businesses. And I could point to, look, I remember, you can find a webinar I did during that time, and I used Microsoft as an example of, like, the stock's gone down this much. Look at the earnings per share. It actually hasn't even declined. And so it's like, unless earnings, we have a bear market in earnings where all of a sudden people stop spending on the cloud, stop spending on AI, right? There's a disconnect between, and the other thing we really emphasize if we're going to go on the investment side, another podcast, is when people are afraid, when the market's down 20%, when volatility is spiking, that is actually the time where your future returns are the best, right? They're the best. And when you're in moments like you are today, where volatility's drop at post Liberation Day and all that whole thing, volatility is very low, sentiment's rising, a lot of risk assets are kind of going through the roof. People get really comfortable and say, "Oh, okay, I'm ready to invest." Your risk is actually higher and the future returns are lower. And so being more cautious when everyone kind of feels comfortable is actually generally the right approach. So you're giving a little snapshot into what a meeting might look like. But I think that's a really, really important point. Help people kind of, and we try to set that expectation from the outset, right? We may actually be slightly more conservative when everything's going up and everyone feels great, and be more aggressive when you don't want to look at your statements. And we believe we can add value and reduce risk by doing that over time.
Yeah, there's that one of a famous Buffett quotes. I might be
Yes.
butchering it as far as be greedy when others are fearful and be fearful when others are greedy, right?
And there's so much truth to it. And it's so hard. I would say more than anything else, Otto, like it's people can hear that. They know buy low, sell high,
Yeah.
but in the moment, behaviorally, it's the temptation to do the opposite is so overpowering that people just they struggle with it. And I think that's a big part of what we do is it's not so much that people can't be good investors, they can. It's not the investments themselves that are not good. It's the behavior, right? And Dalbar's done these studies where if you just look at a mutual fund over 30 years, it may have done 10%. But then if you look at the actual individuals invest in that mutual fund, they've only done 5% because they got out or sold some when things were down and they were buying back in after they went higher.
You were mentioning earlier, Josh, during that period of time, you decided, take a step back, meditate,
Yeah.
go on walks, breathe. It just made me think, do you do something? Do you like to do something, just any
Yeah.
habits, that help you
Yes.
center you every day?
Yeah, it's a great question. So I do actually. Since 2006, I started doing transcendental meditation. So I've been doing TM twice a day for almost 20 years now.
Oh,
Uh,
wow.
yeah, I do 20 minutes in the morning, 20 minutes in the evening, and there's no like in terms of the biggest impact on my life, that habit has no question been the most important thing, right? Because I'm an intense person, as a lot of business owners are. I'm competitive, and that that drive and that stress, if it's untamed and unmanaged, I think it can be very harmful. Not just from a business perspective, from a personal perspective. And so for me, being able to come back to center, find peace just sitting here, like not doing anything, it's very, very very valuable. So yes, I'm a big, big believer in that. And I think there are more and more, like I think Ray Dalio, same thing. He
Hmm.
does TM. I think that Jerry Seinfeld, there's a lot of them out there.
So you do
So
20 minutes in the morning, you said, and then 20 minutes in the evening?
that's right. So I do basically I wake up, I got to get my coffee, and then and then I normally meditate before everyone's up. And then in the generally kind of either in the evening or late afternoon, I'll do another 20 minutes. So my team knows if Josh is sitting on the couch or on the chair, just like this, they know not to bother me.
And for TM, Josh, is it a specific word that you have in your mind? Is that how it works? You
Yeah, I'm
always have
impressed.
like a
Yeah,
mantra, or I forgot what
exactly.
it, right?
Yeah, exactly.
Okay.
It's a mantra, which it doesn't actually mean anything, but it allows and you don't, it's weird. Like a lot of meditations, people think, oh, I need to block out my thoughts. Like I can't be thinking that. And it's not like that at all with TM. You're allowed to have any thoughts you want. It's just when you realize you're not thinking the mantra, you just subtly come back to it. And it's amazing. Like every time I do, I'm like, oh, I gotta meditate. And then like 5 minutes in, if I was having 100 thoughts a minute, I'm having 70 thoughts a minute. And then 10 minutes in, it's six, it's 40 thoughts a minute. And then sometimes there's like, no thoughts, right? It just you transcend. But normally it's just this quieting of the mind. And then you come out and you're clearer, you're calmer, you're more grounded. And it's super important, right? Because if you're in a meeting with a client and they're talking about their life and you're thinking about all the things you got going on or the stresses, you can't be present with that client. And I think being present with a client, being present in anything you're doing is the most important thing.
That's great. Coming to an end here soon, Josh. What does the future look like for you and 4J Wealth Management? What are you most excited about?
I'm most excited about kind of building something that's going to last beyond me. Obviously, I think I have a long time to go still. But just the idea that the next generation of advisors at 4J and the generation of advisors beyond them could be working with the kids and grandkids of the clients I worked with. To me, there's no bigger success story because that now you've not only helped this family put them in a great position and their kids and grandkids trust you because you've done right by them, but you've also created a firm where people who want to get into the business, right, are kind of standing on your shoulders in a way and serving those clients. I just think, that just gives me such a good feeling, a feeling of fulfillment, a feeling of a real legacy.
That's great. When you're not busy working and running the business, what do you like to do for fun in your free time?
So I have three kids. I have an amazing wife who is a big reason for my success, as a lot of business owners are. So I spend a lot of time with the family, but I have a passion for tennis. So I play a lot of tennis, competitive tennis. And if I'm not doing work stuff or with the family, I'm probably playing tennis or watching tennis. I love it.
That's great. I think today something came on my feed. Um, I think something about Bill Ackman wanting something with tennis and the amount of points. I'm sure you know Bill Ackman from
Oh
Pershing
yeah.
Square. Yeah, yeah.
Yeah.
I think he wants to be the oldest pro tennis player or something.
Oh, really? I didn't know.
Yeah,
So he must be very good then. Cool. I love it. It'd be a dream to join the senior tour. I don't think it's happening, but it's just one of those things, right, in sports. And I don't know if you play a sport active anymore. I'm sure you did, but there's like as good as you might be, there's just always levels above,
yeah,
and then
there
above
is.
that, and above that, and above that. And then you see the pros, it's like they're like, godlike figures. And I just think I just think it's one of the coolest things about sports, and it's a humbling thing, right?
If people want to learn more about you, Josh, and 4J Wealth Management, where can they go to and get more information, please?
If you go to 4jwealth.com, is probably the easiest way. And then you can go 4J Wealth YouTube, LinkedIn. We're on all kind of the social media sites. So, but 4jwealth.com, they can go to videos, they can see all of our webinars, learn about us individually, our firm. But this is so great that you do this, Otto, and I think it's a special thing you're doing. So I'm
I
really
really
happy to be a
appreciate
part.
it. No, thank
Happy to
you.
be a
Thank you
part.
for joining me and being a part of it.
Yeah, thank you so much. I hope it was good for the listeners.
Oh, I'm sure. I'm sure they're going to get a lot of value for it. Take
Great.
care.
All right, take care, Otto.